Hello traders, Nick Shaheen here looking at Pinterest reporting after hours. Speaking of after hours, people are still active in the chat room. Speaking of the chat room, down below in the description there'll be a link to the chat room. It's buzzing all day, all night, it's open all the time. One of these days I'll figure out how to put that link somewhere in the video. I just haven't figured it out yet. If someone knows how, message me. Anyway, back to Pinterest. This is Twitter. The reason I have Twitter up here is because this is another stock which I thought would be a COVID stock, and the reaction to the earnings was not. So my expectation was that, okay, Pinterest, everybody's stuck at home, everybody picks up a hobby, Pinterest is a place to be, and so they would have tons of signups, and everybody would be happy. But the reaction was exactly the opposite, because unlike Facebook, this is Facebook, where reported happy, and they're still up there. Same with Alphabet. Okay, Google happy, and we're up there. Pinterest went into the earnings okay, and right now it's at 1740 after hours last time I checked. So it's down, what is that, 15, 16%, maybe 20%. Disaster? No, not so much. So the message of this video is it's a buyable dip with a caveat, and let's get into the details. First of all, you notice there are two dotted orange lines. Those are my triggers for buying it on a dip regardless of earnings. I thought that it would run into trouble up here, and I said, okay, I can't chase it up here because it's going to fade at 22, and it's exactly where it faded. I'm not bullshitting you. That's exactly the note I share with friends and members. So, but I did say if it dips, I would like to buy it on the dip, because then it would have the chance to draw the handle to the cup, kind of a deal. So I would rather chase it above here. I know this is, wishful thinking at this point, but this is how you build a chart and a tradable pattern. So it's exactly between the two buy the dips. This buy the dip was an okay one. This buy the dip message, you can see it here. I don't know if you can. It says buy the dip, exclamation point, which is a much stronger buy the dip. So when the trigger alerts me tomorrow morning, I will ignore the first one knowing I have another one below it. So I don't buy the dip at the open, and I'm not saying to anybody to go buy the dip, because there is trouble ahead for the whole economy, in my opinion. Technically and fundamentally. So this is a positive video. Please remember that so you don't throw potatoes at me. There is no business for the stock market to be this high. I don't care how much money we're throwing at it. The world is shut down, and the P&Ls are struggling. There's no sales flowing from the top line mostly, and there's nothing but expenses. Speaking of expenses, they blame the expenses for that. But in any case, if what I'm seeing in the stock market is correct, there is a scenario that puts the SPX at around 1800. I'm not causing the alarm. This is the guy that told you to stay long in 2019 through the trade tariffs and all of that bullshit. This is not me being an alarmist. This is me being a realist. We can have a debate about that. So trust me, there is technical risk to the downside. I can see technical risk to this side. A dip, an extension this way, and then another dip equally as long as this one. So that says that theoretically, the $8 low, whatever that is, $10 low may not hold if the overall market doom scenario develops. Big if, okay? So I'm telling you, whatever I do to catch a dip here will have a stop loss set somewhere. And that is different from person to person. So the message again is, this is a buyable dip based on this chart alone. Because this rally, 50% retracement is about here, eyeball. We can find that out if you're anal about this thing. So, okay, this is the 50%, just below my second alert somewhere, unless I mismeasured. Okay, so 50% is right here. It is totally normal for any rally to retrace 50% and not change the narrative, which means they go up, they rest, and then they go to tackle this neckline again. They take a couple of tries and then they rally. That's why I put this up here. Same with this. This fall, they recover half. They stall a little bit. See, they stalled a little bit. This little here. So now they're fighting over it. And if I look left, this was also kind of the place where they fought before. So this place has history. So it is important to note whatever happened in the past. So yes, it is a buyable dip, but with a big caveat, it's a trade. I do not want to own these shares forever. And I personally don't have that much belief in them. The reason they're selling the stock is because they said expenses were too high and they blamed new signups or something like that. I thought that was ridiculous. It's a cop-out. You want new signups and you wouldn't complain about it. You would word it somewhere like, the exciting news is we had new signups and that we're not worried about spending because growth is there and we're going to have this much and that much and all of that. Sorry, lost the train of thought. Got people talking to me. That's problems of everybody in the house. Anyway, so forgive me. Buy the dip, set a stop. It's a trade. So if I do a trade, if I sell a credit put spread, a bull put spread, a directional bet that prices will not fall beyond a certain point, wherever that point is for you, then I should stop myself out. Every person has different risk tolerance. Some people can see red and not worry about it. Other people see one dot of red and they freak out. So I can't tell you what the stop should be. This is a personal preference thing. So the point is, if I'm long the stock, I shouldn't panic because if it's a buyable dip, then the stock should have support. Technically, it has support. We can look at it. Okay, one note before I drill in. Notice this yellow line and this green line right there. This whole zone is very binary. Look, a whole bunch up there, solid floor, and then whoosh, lost it. They tried to regain it. They lost it. This was a complete lie. Hopefully some of these people got out here. And then rejection. Clearly, this is repulsive. It will take a lot of hard work to burst through. Just keep that in mind. So if the bounce gets you almost even with your money, if I was stuck red and tomorrow the thing bounces and it's like, okay, I'm only down like 5% or 3 or 2%, gift, I'm out. I don't care if it goes to, I'm out if I own stocks and I replace it if I still want to be along with like leap calls with tiny fraction of the risk. Stock replacement. So maybe even sell some puts to buy those calls. So it'll be zero out of pockets. So if I was willing to hold the stock here, I wouldn't mind buying it there by selling the puts, for example. Okay, so stock replacement strategy works. But I wouldn't, if the bounce happens, okay, this is where I need to drill down to show you the point. So right now it's here. So if it bounces tomorrow, anywhere near 1950, it's going to face resistance. So if I see a bounce and I own the stock and I don't start clapping, go, 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 I was like, thank you, I'm out. That's how I would treat it. Because if the whole market rallies, great. But if it doesn't, not so great. So today we had a super strong market. The aftermarket the late day and the aftermarket is not super strong. But we're going into ADP tomorrow morning and the jobs report on Friday, so it's a lot of COVID crap to deal with. So keep that in mind. A bounce, just like the halfway thing. So if it fell to here, halfway bounce up is going to be rejected at first attempt. So 19 and a half, thank you. If that gets me out with a 2% loss, thank you. So that's my personal feeling. Nick signing out. What is it? Under 10 minutes. Sweet.